Okay, let's get started. Thank you very much, everyone, for joining. Appreciate it, especially to the panelists. So I'm first going to introduce everyone, and then we'll dig in. It's a lot to discuss today. I hope everyone can hear me clearly. Sally, can you hear me clearly?
Yes, I can.
Super. Let's dive in. So I'm going to start by introducing the panelists. First of all, I'll introduce myself so you know who I am. My name is Anand Krishna. I am founder and CEO of Inkle. Our website is inkle.io. Inkle is a US CPA product in a chat, generally used by US high-tech venture-backed startups with a cross-border presence. So that's kind of what we do. We have several hundred companies on the platform who use our product for books, tax, and compliance in the US and cross-border compliance matters. So yeah, would love to work with you all. Please do ping us anytime. You can reach me on LinkedIn or anand@inkle.io. That's a bit about me, and I'd love to now just introduce the panel so that we understand some of the expertise here. So we've got a nice range here of compliance and fintech. So I'll start with Company Secretary Company Secretary Vignesh Bhatt and Chartered Accountant Pawan Sharma. So thank you both for coming. I'll just ask you to just say 2 words about yourselves, both from BCL India, who are actually our CAs here at Inkle, and my deeply trusted advisors and very, very much experts in this field. So I had asked them to join. Thank you so much both for joining. Please kindly just say a word or two about yourselves, and then I'll introduce the others as well.
Yeah, sure, Anandi. Thanks so much. Pleasure to be part of this event. So BCL India is an accounting, payroll, compliance advisory firm. We set up 2011. We have offices in India and UAE. Close to 200 people working with us. Have some lovely clients like Anandji, right? And yeah, happy to be part of the session and contribute a bit. I handle the tax and structuring part. Vignesh is the company secretary, handles FEMA and ROC matters. We hope we can bring some of our experience and knowledge and see how we can overcome the challenge that we're currently facing with the bank going up in flames. Thanks.
Great, thank you, Vignesh.
Yeah, hello everyone. I'm Vignesh, founding partner of BCL India. I'm a qualified company secretary as well as law graduate and insolvency professional. Thanks for inviting me to this presentation, and happy to contribute in whatever way I can, so that everyone gets benefit of Indian regulation and make most of it. Thank you.
Yeah, wonderful. Thanks so much. I appreciate that from the BCL partners here. And we have also Shaili, who is Shaili Rane, who's Director of Business Strategy at RazorPayX in Bangalore. And also we have Makku Agarwal, also from RazorPay, and prior to that with RBL Bank, Associate Director of Banking Strategy, both at RazorPay. Wonderful to have you here. Would love to hear more about some of the solutions that you've been talking about today with your clients. So yeah, please kindly, would you say a word about yourselves?
Yeah, thanks. Thanks, Anand, for inviting us here for the warm introduction. So folks, I lead business strategy at RazorPayX. RazorPayX is the neobanking arm. So we are a business-focused neobank, which has been set up with the vision and mission to help businesses in India, ease money movement for businesses in India, and that includes money movement in and outside the country as well. So we do a bunch of things to basically ease how businesses deal with money, and that includes moving funds from outside the country into the country. Yeah, very happy to be here and happy to answer any questions and help with this today. Thanks a lot.
Thanks very much. And Makku's also here, right?
Yeah.
Makku, are you with us?
I hope am I audible?
Yeah.
Yes, you are.
Yeah. So Anand, thank you so much for inviting us.
Yes.
I work closely with Shaili, a part of business strategy team, and as Shaili mentioned, we are here to help businesses make their fund movement easy, which includes domestic payouts and the cross-border payouts. Yeah, so happy to be a part of the panel. Looking forward to helping and answering as many questions and answers we have today.
Wonderful. Let's dig straight in. Thank you to all the four panelists. I'm going to start by just giving a little bit of background. Last night, of course, plenty of news came out about the situation with the Silicon Valley Bank, and that caused overnight in India time zone and daytime in US time zone a large number of anxious founders who had a Delaware C Corp and were banking with SVB to kind of become very worried about capital balances that were being stored in Silicon Valley Bank. Overnight, dozens or hundreds of founders were reaching out to us all and wondering about methodologies for reallocating their capital, some under the pressure of VCs, in fact, some are just feeling the pressure themselves and wondering what the best solutions were, trying to quickly open new accounts, trying to move money overseas, trying to figure out compliances. So that's the purpose of this call, is the latter piece. We're not here to sell any US products. We're just here to actually talk a little bit about the India side and the compliance. Okay, good. So I think everyone understood the background already. Let's dig straight in. So we're going to go straight to intercompany compliance. Right? This is the subject of the talk today. I've actually just drawn up a quick chart here, which I'd like to share with you all. And hopefully you can see my screen. I'm going to talk through a couple of these, and then we're going to ask the experts to chime in as well. Please feel free to post questions in the Q&A. Kindly post them in the Q&A, not in the chat. It helps us to make sure we track them all. Here we have in column C, D, and E, foreign direct investment, transfer pricing, and external commercial borrowing. And then we have royalty and dividends, right? And gift city, which I'm going to touch on as well, and ask the Raise the Pay folks to touch on. Now, what I did was out here is I actually started by saying, okay, what is it that defines the ease of access? So let's just do one at a time, right? Let's just say FDI. It's a difficult process. It's not repatriable. There's no tax implication. There's medium tax costs. There's quite a bit of paperwork, quite filings heavy, fair bit of headache in terms of the movement, tracking the money movement through SWIFT, and ensuring that the right amount hits and then reversing the excess amount. You can only use SWIFT. You cannot use non-SWIFT channels, and the sender is obviously the parent. So this is kind of some of the things that I've thought about. And forgive me if there's any mistakes here. I'm obviously not a licensed professional or CA by any means, but I'm going to get those folks to chime in. But I've given from a founder's perspective of someone who's running a Delaware C Corp with an India subsidiary. Transfer pricing, fairly easy to do. You just fire the money. It's not repatriable. There is a tax implication between 3 to 6% of the TP margin, which tends to be up to 12 to 20%, that kind of thing. There's a low transaction cost and a little bit of paperwork at the start with the master services agreement, ongoing invoices, a little bit of filings with the code on the invoice, low headache, fairly easy to do. You can use any payment method. You don't have to use SWIFT. You can even use like kind of TransferWise if you want. There's just really no restriction on what you use, and the sender is the parent again. And then finally, I've picked up something here which I thought was really interesting, and there's little spoken about, is external commercial borrowing. It's difficult in terms of understanding it. It's not, I mean, I'm sure the compliance professionals here will disagree, but I found it a little tricky at the first because I think it's just not so popular and it's fairly rarely heard of. That said, it's repatriable. In fact, it's the only repatriable methodology here. And the tax cost is nil, which is wonderful. And then there's low transaction costs. There's a little bit of paperwork. Monthly filings is what puts a lot of folks off. You can use any method. And again, the sender. I'm not going to go too much into royalty and dividend. These are generally sent by the subsidiary up to the parent. But dividends are obviously fairly rare in startup world, given that there are less profits in the early years. The royalty, of course, does happen in situations where the IP is being loaned by the parent to the subsidiary. So we're gonna kind of just pause on these two. We're not going to spend too much time on those two. What we are going to do is touch on Gift City, which is not an intercompany movement, of course, but is very interesting. It opens up a channel for the US Delaware C Corp to have a presence in India. But again, I'm not going to touch too much on it because I actually want the experts to talk more about it. But there's a lot of greens over here. It seems to be a very interesting product to move money into and at a high yield. So we'll definitely get more into that. Okay, wonderful. I'm going to pause there, and then I'm going to invite a little bit of input from the compliance professionals to start with, starting with Pavanji and just understand a little bit more about these three methods here and the implications. And bear in mind that I constructed this, so there may be mistakes here, and I would invite comments here. Thank you, Pavanji.
Sure. Thanks so much, Anand. I think it's very well summarized. Little for me to add or correct. I think it aptly describes the challenges to bring in money under three different options. Right now, FDI and ECB. I'll also ask Vignesh to chip in as far as the intricacies are concerned. But FDI is capital introduction into the company, which means that the money is locked and should be used in case you want to bring in capital for the next 12 months. Right? ECB is repatriable, but ECB also has a minimum repayment period, which means that you can send money back, but it has to be here for at least 3 to 5 years, depending on what you intend to use the money for. Now, transfer pricing is against invoices. Most Indian companies that are set up as cost centers have a transfer pricing agreement, master services agreement with the parent company, using which they raise invoices, money sent by the parent company at a certain markup, and that money is used to pay expenses. Now, while the invoice route by itself is not repatriable, one category, or I'll say a classification of TP, could be advances against service exports, which is a fast way to get money into India. You can use these advances to offset against invoices that would be raised in the future. And in case the invoices are not completely offset, or say that there is a deficiency in service, or that you don't intend to continue the project, you can send that money back. Now, given the situation that we currently find ourselves in, the question is, can we find a solution to send money out of SVB into an Indian bank? And is there a way to get that money back to US if it is necessary? Because the intention may not be to lock those funds in India. They originally were in the US. So is there a mechanism by which you can send money and take that back to US if need be? So advance against service exports would tick most of these boxes. And in terms of tax cost, nothing special. It's not beyond the tax cost applicable to the TP invoices, but of course you'll be paying taxes only on the invoices that are raised, not on the entire advance. And the other documentation can be just the same. There's a purpose code. The same purpose code can be used. I think it's P0802. The same purpose code will work both for exports as well as advance for service exports. And if need be, for a short period of time, you can retain this money in the EEFC account as well. That's the Exchange Earners Foreign Currency account, so that you don't suffer the Forex risk, fluctuations. So you get about 60 days time to get money into your account, and by the end of the next month, you need to send money back. So that way you can protect yourself from fluctuation risks as well. So I'll pause here. And Vignesh, if you want to add, please feel free, FDI, ECB, in case there's anything specific.
I think I will just concur the views of Pavan and Anandji, because FDI and ECB, these two instruments, you can look at from a long-term instrument perspective. If any investment or any parking money is for a short duration, then FDI, ECB is not advisable. TP seems to be a better route. So for now, TP one can consider.
And Vignesh, while we have you here, so please tell us a little bit about the compliance filings involved at the ROC level in any of these FC, GPR. How heavy is that?
Yeah, sure. So the when you get a money as an FDI, it may be a equity share or other different type of share. The process is little cumbersome. Once you wire the money, the purpose should be mentioned very clearly, and the KYC of the remitter along with the SWIFT of the remitter should come to Indian bank, and Along with that, Indian company should pass a resolution to increase its authorized capital, and also it should do a valuation of its Indian company. Based on the value of the company against the investment amount, company should allot a equity shares or the other type of share which they want, and do a certain filing with ROC called allotment form, called as form fast 3 for increase of capital form SS7, and RBI also to be intimated by filing a form FCGPR that everything should be done within a 30 days of receipt of money. And as I said, once this FDI comes and sits, it is locked. Taking back the money is a bit difficult. You have the option of buyback, but buyback has a restriction that you can only buy back to the extent of 25% of your capital and reserves. That means company should have sufficient balance in the account, and what you can buy back is only 25%. So 100% of investment cannot be bought back. That is one restriction. Second one is under FDI route, companies can think of issuing the another type of shares called redeemable preference share or optionally redeemable preference share. The one of the condition is that there should be a minimum lock-in of 1 year period. Only after that period, company can consider to redeem that out. If not, redemption will be treated as a deemed ECB. So there also at least a 1 year of lock-in one can expect. This is with respect to FDI. When it comes to
Sorry, I have a quick question. When we wire the money down for FDI, and then we want to wire a new chunk down, a new slug of capital down through FDI, that involves a fresh issuance of shares. Is that a rights issue?
It is a rights issue. You can do it under a rights issue. Companies Act allows you to take a money under rights issue. There is one more method also called private placement that is little more cumbersome than the rights issue. So better to do under a rights issue for all these cases.
And does this require an advocate or lawyer to start drafting into share purchase agreements every time?
One time you can have an agreement for an investment in a tranches, and using that agreement as a base, you can take an investment in tranches.
I see. Got it.
There's one point, sorry, Anji, one point that we need to mention here is the valuation, right? While the money can come in tranches,
yes,
you still need to conduct the valuation. The valuation certificate's normally valid, for 90 days.
yes.
If it goes beyond 90 days, you'd need a fresh valuation certificate.
This is in the case of FDI. So
FDI,
then,
yes.
even though the first agreement would stand, you'd need a fresh valuation every 90 days.
Right.
That is correct.
I see. And in terms of the actual movement of the money, I'll just add a note from my side. What I've seen is that the movement of money via SWIFT from a normal bank in the US is actually fairly straightforward, and that's where SVB had a huge edge, has a huge edge in terms of just the ease of doing it, right? Being a SWIFT participant, being a very professional player in this intercompany international forex space, engaging in SWIFT transactions, the 6-point KYC from the recipient bank, the smoothness of the movement of the money was incredibly good, especially with their forex capabilities. So that's still there, and I must admit that I've always had a very positive experience with that. The downside, of course, of using these neobanks, such as, if I may name them, Brex and Mercury, they have wonderful capabilities, but the small downside that I've experienced is that when you wire the money, these participants, they're not banks, they are fintechs. They have a underlying bank who may in fact have a correspondent bank who may in fact be a SWIFT player or not, and then that adds 2 or 3 layers to the, or middlemen to the step of money movement. And therefore, when the SWIFT actually does eventually go out and the money lands, the 6-point KYC SWIFT message coming back tends to be cumbersome because it goes to 2 or 3 parties. And very often, if the money's slightly in excess of what it's meant to be, so let's say it was 1 lakh of paid up capital and it's just 1.2 lakhs arrived, and we need to send a little bit back, that tends to be cumbersome as well, because again, there has to go back 2 or 3 steps. We've seen this a number of times. It's generally easier when you're working with a bank versus a fintech. And so that's just something that I wanted to reflect on with regards to FDI money movement. This is obviously a very rare occasion that you do this once or twice a year. Would you agree with that, Pavanji?
Yes, that is true. Yeah.
Cool. Okay. I'm going to ask Sally to step in at this point. Sally has a solution here for FDI. I would love for Sally and Marco to talk a little bit about the solutions that they've prepared and how that plays out and why it's beneficial. Sally, would you like to comment, please?
Yeah. Hey, thanks, Anand. I think I'll probably just invite Maku to do this because he's the expert. He's the one who's been working to design this. So yeah, we basically have a solution right now for two of the routes that are on this, on the screen. FDI, actually for FDI, TP, and Gift City. And maybe Maku can, quickly give us an overview of what the three routes mean and of every every merchant.
Great, thanks, Shelly.
Yeah.
I think Pavati and Anand has very well covered on the tax aspect, right, as to what are the tax implications. Let me just take a minute and explain you as to what exactly the solution we're trying to bring down from RazoPayX, right? When it comes to FDI, I think as Pavanji rightly mentioned, 6-point KYC is one of the most important documents, right? We at RazorPay, we have started this facility, where we say this FDI as a service. We reach out, obviously, we talk to many founders and we facilitate this transaction entire end to end, where we talk to your chartered accountants, we talk to your bankers, which is your foreign investor bankers, and we ensure that the FDIs are basically disposed within 48 hours. So when I say so, what I mean to say is once the funds are transferred from your overseas bank account, which could be a Mercury, a Brix, or any other bank account which you hold in, right, all is what is required. It's a pretty seamless, simple process. All is what is required is just follow the instruction which we have, which we generally share with you. All is what you have to do is basically instruct your banker over there to transfer the funds on the given master, send the KYC along with that. Once the money is sighted over here in India, we give you the conversion, right? We issue you the 6-point KYC and FIRC copy within 24 hours. And then obviously, the chartered accountant goes ahead and file the FCGPR in the firm's portal. Right, so that's a route which many of our portfolio companies have been doing it with us since we started this service from last 6 months. Uh, the charges are absolutely free of cost, right? We don't charge you anything for this entire service. Transfer pricing again is a simple P0802 purpose code. You can transfer the money from anywhere in the world to your Indian bank account. The funds generally comes within 24 hours. Once the fund comes, we give the credit to you on your bank account. This is the disposal instruction what you give us, and it could be any bank, right, with our preferred banking partners and or any of the bank account which you hold in India with the bank. ECB, again, I'm not covering much on ECB, it's external commercial borrowing. A little cumbersome process, there are approvals involved here from Reserve Bank of India. But yeah, as Vignesh ji and Pawan ji mentioned, that this is the only option where you can repatriate the money back, right? Obviously, there are certain compliances involved over here. See, the new option would be, which we found very easy for the corporates, for the companies who do not want to convert the funds in INR, however, want to move the funds from US to India, or rather, US to US bank account is a gift city option. What we do at RazorPay here is we allow you to open a bank account in Gift City within 24 hours with our preferred banking partners. Right? The process is pretty simple. Couple of KYC documents required. Again, this entire service is free of cost. You can transfer the money from USD to USD, basically in 4 currencies, which is USD, Australian dollars, GBP, and Euro. We help you open the account in these 4 currencies. You can transfer the funds in the bank account, and obviously it works as a regular bank account for you. You can do any transactions, any sort of transactions, SWIFT transaction, which is basically MT103, via this bank account. So this entire service as a bouquet is available, with our preferred banking partners. Given the essence of the time, we have prioritized this entire process, and we are helping you to set up the accounts as soon as say 12 to 24 hours. So these are the pretty much options which are readily available at VisaPayX, and me and my team works to ensure that we do it seamlessly.
Wonderful. That's really great to hear. Thank you so much, Marku. I have some questions about Gift City, and then we're going to dive into the floor's questions as well. Gift City account is in the name of the parent or the subsidiary, or I'm sorry, the US entity or the Indian entity?
So I would rather say, Anand, that the Gift City account can be opened by a non-resident company. It could be a company based out in US or Singapore or anywhere in the world. It should not be an Indian registered company.
Got it. And why would a foreign company want a Gift City account?
That's the fastest way, right? See, you do not want to convert your money from US dollar to INR, right? At this point of time, what you want to do is you want to transfer the funds to a other bank account where you can continue enjoying the interest rate as high as what you're getting in the US. So
Right.
just FYI, in the Gift City current accounts which we're opening, the interest rates are as high as 5.5%.
I see. And so there's a good amount of interest. I don't need to change my the currency. I can repatriate at any time.
Yes, 100%.
And there's no kind of paperwork, transaction costs, filings, RBI filings.
Absolutely.
Got it. And how can I use those funds in India for my, let's say, if I have an Indian subsidiary? How does the money move from the Gift City account to the Indian?
So it works with the same concept, Anand. See, today you have to see the way you are doing a transfer from your, say, a foreign bank account, say, for example, a Wells Fargo account, right? Always what we do is you do a MT103. The same thing works over here. You do a MT103 from your Gift City account to your Indian account, Indian current account, and the money comes and sits over in the Indian account.
I see. And
obviously that money you use for your day-to-day regular vendor payouts and payouts.
got it. Does it trigger any kind of permanent establishment of the US entity in India?
Sorry, come again?
Maku, can you hear me?
Sorry,
maybe it's a question for maybe it's a question more for Vignesh and Pawan. Does a Gift City account have any implication for the US entity or the foreign entity in terms of establishing itself in India, permanent establishment, branch office, liaison office, all those kind of implications? Is there any such implications?
Yeah, as you were asking these questions, that's one of the questions that was running in my mind too. I'm not sure if just a bank account could be treated as a permanent establishment. There's not a branch or a liaison office. Now, yes. Gift City though is treated very favorably even by the finance ministry. Yes. There are a lot of exemptions that entities in Gift City or accounts in Gift City would be entitled to.
Right.
Of course, I don't have a ready answer to as far as the bank account itself is concerned, but must be worth exploring, right?
Yes.
If banks are doing this day in day out in Gift City, I'm sure they would have they would have looked into this matter.
For sure.
Deposits which is kept in your Gift City account is not taxable in India.
Ah, okay, interesting. Got it. So it sounds like probably PE is not established there. Great. Okay. Let's talk a little bit about the ease of a Gift City opening. So what do I need to do if I want a Gift City? Do I open it? Do I have to fly to the US? Do I have to meet someone here physically? Is there paperwork involved? Is it a wet signature? Is it digital signature? Is it 100 pages of documents I have to sign, or like what's involved?
So Anand, I'm sure the tickets for the Gift City account will be to fly to US will be very costly at this point of time. You don't have to do that. All is what you have to do is reach out to somebody in ReaserPay.
Your voice is cut.
Hey, Maku, we've lost you. Your voice is getting cut, Maku. Okay, we can't hear. Okay, let me try. I'll answer that till Maku comes back. So no, you don't.
Hope I'm
you don't have to,
now you're audible.
Now you're back. But
we lost you when you took your earphones out. Please.
Yeah, I'm saying that the account opening process is pretty simple, right? There is a couple of documents, for example, your US corporation documents. The way we have CIO in India, corporation certificate, you have a US corporation certificate or Singapore corporation certificate. You have to share that, couple of KYC documents and account opening form.
Got it. Perfect. Okay, cool. Let's move on from Gift City then. Thank you for that. Let's talk a little bit more about FDI and transfer pricing in ECB. We've talked quite a bit about the compliances involved in the FDI process. I'd like to go deep on the transfer pricing process and talk about some of the disadvantages here. I know that Razorpay has a solution for transfer pricing. Could you just talk us through step 1, 2, 3, 4, 5, how that works and why it's beneficial? Again, we've lost your voice.
I hope I'm audible, Anand.
Now you're audible, yeah.
Yeah. Okay. So see,
Yes,
it's a simple transfer, right? You are already doing it. Most of our portfolio companies do it on a day-to-day basis. All is what is required, as you rightly mentioned at the beginning of the call, is a disposal instruction, a purpose, right? So most of the company generally shares the purpose as a P0802, which is, your software export, or probably, you invoice your parent company for all the services which you give in the backend, right, which is in India. Once you wire the funds from your US bank account to Indian bank account, right, which is held with our preferred banking partners, we give you the best of the available rate, which is dollar to INR, and we convert the funds and transfer to your bank account. It's a pretty simple, straight-through process.
Thank you. I'm going to take a compliance perspective on this now. Pawan, we've talked plenty of times about this. The way I like to think about this is like 2 jars filling up with water. We've touched on this analogy. As the money moves, the invoices have to match. Ideally, at the end of the year, they kind of need to be level. Otherwise, the bank can give you permission to make them level for an extended period of time. Would you roughly agree with that analogy? And could you describe it in a little bit more detail?
That is true. So as far as money coming into India is concerned, we would have to raise invoices against the money that's coming in, right? That's the only way we are able to tie it down to the MSA. That's the only way we're able to define a purpose to it, right? And that's the information given to the AD bank, saying I'm receiving money into India for the purpose of services that are being offered. And these invoices have to be closed within a period of 1 year. If they're not closed, then we would need to go back to the AD bank and through the AD bank to the RBI, seeking approval for an extension. Sometimes, yeah. Yes, please.
What do you mean by closed within 1 year? Sorry. Let's say I'm sitting on, $500,000 in my US bank account. I want to move, half of that down to India. I don't have invoices against it right now. Can I move like $250,000 to India right now?
You can, and which is why the method of advance against service exports would work. So what you're getting today is an advance against exports in the future.
Okay.
So the $500,000 can be offset over a period of 1 year, can raise invoices on monthly basis. And in case you believe at any point of time that your project is complete and you don't need any more money, you can send that money back to the US and say that this project is complete, I don't need this money, so here's the money back. But you cannot refund money beyond 12 months. So for example, we are in the month of March. If you've not used the money by March 24, then you cannot refund money in April, May 24 without the approval of the RBI.
Interesting. So within I'm in March 2023. If I send down $250,000 and I don't consume it by 12 months later, I can't carry it over March 31st.
Correct. 12 months from when you receive it.
Oh, I see. From the anniversary of the date that I received.
Not the financial year.
Not the financial year. I'm sorry. Okay. And so what are the downsides apart from that of just bringing a large amount of money down today? Is there any kind of other downsides of bringing just a large slug of capital down today?
Not that, because the money that's coming in, there's no tax that you'll be paying on it. It's an advance against export, so it should be covered by your GST benefits too. So there's no GST outflow there. Of course, exchange fluctuation could be a risk beyond the 60th day because you cannot hold money in foreign currency. Right? Okay. So that is one downside. Okay. But of course, I've seen companies park those funds in short-term deposits, which give them decent returns. Which can take care of some of the exchange risk.
Interesting. So when you say there's no income tax tax implication, talk us through that, because I would have thought that if it's coming against an invoice or potentially going to come against an invoice, then if the company is profitable, obviously if it's profitable, there's going to be an income tax implication, right?
That is true. So let's there are 2 points to that. The first one is that you pay tax on the services that are being offered,
Right.
which means that you pay tax on the invoices that are raised and the profits that you make on the invoices, and not the advances that you receive. So say in your example, if you bring in 500,000 into India, now you don't pay tax on the 500,000. You pay tax on invoices that you raise on periodic basis, which are offset against this advance.
Got it.
So by the end of the year, you may have spent only say 100,000. Let's say you've utilized only 100,000, for example. You pay tax only on that 100,000. That is one.
Got it.
The rest remains on your balance sheet. It remains as an advance, which you can offset in the future. That's one. Second thing is about the point that if there is a profit, now given that you have transfer pricing guidelines, I would say there should be a profit, unless there are very good reasons for there not to be, and those reasons they're outliers. It's very hard to say that you're a profit center. Cost center is a loose term, but in reality, you're a profit center. You should be earning profits on transactions with your related parties.
Interesting. What's one way of not of trying to offset some of that profit? I mean, can I burn up some of that accumulating profit?
Not really. I'm quite confident answering that question, although it's controversial, because there's no other way of saving tax, right?
Right.
The fact is that under any transfer pricing agreement, there's a markup on operational costs. That's how we calculate margins.
Right.
So even if you did burn up, it means you're increasing your cost base. When you're increasing your cost base, it obviously means you're increasing your profits, right?
Right.
So one way is to move some of the costs from India to US, right? So the costs are incurred in the US, which means India P&L is not hit, which means the markup doesn't get triggered. But of course, if it's cost that is connected to India business, you would be forced under accounting standards to record the transaction. If you don't, then it'll be picked up by the audit and you still have to pass the entry, right? So like I said, I don't think so there's a way around it.
Got it. Perfect. Okay, good. I'm going to take some of these questions now. Keshavan from iShield asks, we should be able to move money from SVP to India with purpose code P0802. Isn't that correct? I think we've answered that. That is correct, right, Pawanji?
Yes, that is correct. Maku also, confirmed that. I think that is right. Yeah.
That's the correct code there, Maku? Yeah, P002, right?
That's right.
Perfect. Okay, so we're going to dismiss that one. I thought Gift City mode is ring-fenced export orientated with minimal domestic interface. How is it an option? How is it an option? Okay. Yeah, I guess my table wasn't clear. It's not for the Indian entity, it's for the foreign entity. So perhaps it shouldn't even appear on my table. It's not an intercompany movement at all. It's just the foreign entity holding a domestic, holding a bank account in India. I don't know if I should call it domestic, but yeah, it's not an intercompany movement. So I'm going to dismiss that. Let's go to Anand Sundar. There should be another criteria here, GST. Stuff like royalty has an 18% tax leakage. Pawan, can you respond to that?
Yeah, I can. So this is the second part of your table where the Indian company was the parent entity. Right? Yeah, the first three, correct, right? Now if you look, yes, this part. So in this case, you're right that in case there's an invoice for royalty, so which means there's a royalty recharge, that's a cost to the Indian enterprise. So any import of service to India is subject to 18% of GST, and we pay that on reverse charge basis, as good as customs, right? If you're importing goods, here you're importing services. But I'd not call it a leakage because you can offset that with sales that are in India. In case there are no sales and you're exporting those services again, then the money can be claimed as refund. Of course, you'll have to tie these two down, saying that you're incurring these costs for the purpose of these exports. So it's a cash flow issue, but it is recoverable.
Okay.
Second, another aspect is, of course, the withholding tax. So in addition to GST, there's also withholding tax, and withholding tax could actually be tax leakage because when you send this money out, you have to withhold taxes in India, and if the US entity, the subsidiary, is not profitable, this is an actual tax cost.
Got it. Okay. You're again, this is when there's a US parent holding the IP and loaning that IP to the Indian subsidiary, right?
Correct.
Okay, got it. Perfect. Okay, we'll move on from that. So there is some discussion around GST in the aspect of royalty. Is there any GST impact on any of these other columns?
No, not that I can think of. Of course, TP, there's a GST impact, but it's zero rated, right? So there's no real GST. You can get refunds.
Got it.
In no other transaction would there be GST.
Okay, perfect. And let's talk a little bit about why do we call ECB difficult? I think it's almost automatic approval nowadays.
Yeah, not really. The reason why it is called difficult is the first criteria is that the person who gives the loan should have a more than 25% equity in the company, and whatever equity they are owned, that should be reported and registered with Reserve Bank of India. That is a step number one. Step number two is that an application should be filed with AD category bank, that is any bank in India where they have an account for an Indian subsidiary, and bank should approve the ECB application, and they should generate something called loan registration number. So without a LRN number, no company or no individual can remit money to India. Third is there is a minimum maturity period of 3 years. That means till that period, you will not be able to repatriate the loan. So this is a reason. The main primary reason is taking a approval from bank will take some time. That's why it is considered as difficult.
And Pawan, we've talked about ECB. Despite these difficulties, why is it still attractive?
One reason is that repatriation, right? After 3 years or 5 years of minimum maturity, then you can easily repatriate the money, and there is no tax implication on any of these things. Like in TP, you have minimum markup rate. In FDI, when you get a money, you need to pay some stamp duty to Indian government, which is roughly like 2 to 4% of the amount invested. In ECB, nothing, zero cost.
Interesting. And
also to add,
Pawan,
also to add quickly to that, Anand, so in the case of transfer pricing, when you're raising these invoices, you accumulate those profits in India, correct?
Right.
Because the 10-15% mark. And the question is, how do you send that money back? And that becomes a problem because you then get into dividends and taxes.
Right. Yeah. Okay, good. So the ECB does have advantages. How much of a headache is the ECB on a founder, or is it really just the CA, CA's headache?
Anand, just to add over here, I would agree with this question that this is a difficult process, but let me assure you, we have done a couple of ECBs. We have helped companies to raise ECB via our banking partners. In the last 2 months or so, I think we have easily done about 10 odd ECBs. The process nowadays is simplified with RBI. Right, we have seen approvals coming as Pawan and Vignesh rightly mentioned. The entire process for LRN nowadays is not taking beyond 4-5 days. Right, so the process has been streamlined at RBI's end as well, and the documents are also pretty simple. Right, vis-a-vis what it used to be since when I started my banking, almost 10-15 years before. Right, so yeah, I mean the answer is yes, it is difficult. But I think there are many steps which has been taken by central bank as well to make it simple. And obviously, we at Razorpay, we help portfolio companies or our customers to raise ECBs, to get the necessary approvals from Reserve Bank of India, again at a zero cost.
Wonderful, great. So I guess the headache on the founder's mind has been reducing. Right? That's the answer that I think.
Precisely.
Okay. Pawan, Vignesh, Pawan, would you agree with that?
Yeah, we do. Yeah, we are not zero cost though. That is one. And yeah, we thrive on headaches. So that's the only difference.
I understand. Good. Okay. All right. So that's on the ECB. And let's jump to some more of these questions. Great job. Could you also include an approximate transaction cost basis Inkle rates, for example, FCGPR, say 20,000 rupees per filing? Okay, Inkle does not conduct any activity of filings in India. So I'm going to defer to Pawan on this, who runs an Indian CA firm. Pawan, the rough filing cost for an FCGPR?
Yeah, about 25,000. Yeah, depends on the case. Maybe we can look at it
Got it.
on case-to-case basis. Yeah.
Got it.
Anand, there are two costs involved over here. It's not just 20,000. What happens is any FCGPR which has to be approved by a ED bank, the ED bank also charges in the range of 15 to 20,000. Apart from over and above the charges of obviously the chartered accountant or the law firms, right? And it is per reporting, right? So 15,000 plus taxes is per reporting. At Razorpay again, we have waived it off.
I see. Interesting. Okay, Keshwan asks again, in the transfer pricing model, instead of a wholly owned subsidiary, can a vendor partner in India get money advanced from the US entity? Let's say 12 months worth of invoice paid in advance and then ticked off against future actual work invoices. So this is like let's say an unrelated entity, not a related party transaction. Pawan?
Yeah, but this is not advisable, and I'll ask Vignesh to chip in here too, because this will trigger ECB guidelines. One of the classifications under ECB is commercial credits that are being offered to Indian subsidiaries. So in case Indian vendor payments are settled by a foreign company, it is treated as a loan given by the US company to the Indian company, right? Vignesh, please feel free to correct me if this is, if I'm wrong.
No, that is correct, because this will have a lot of implication from a bank, and also it is not a right method to do it.
And these are unrelated parties, right? Got it. Okay. Thank you for that. Give City account opening process, digital or physical, which bank? Okay, I think we answered that. It's
I think we covered this. Yeah.
Yeah, it's an easy digital process, largely with many banks, I think, right? Sally, I think you've tied up with RBL, but there are.
Yeah. By the way, just to be clear, we have a preferred partner bank at Razorpay, but there are multiple banks that will allow you to open a Gift City account. So you can go to the other banks as well.
Got it. Perfect. I thought Gift City is restricted to fintech activities and not just any subsidiary. Is this really an option? Maku? It's
Sure.
It's not for fintechs, right? It's for any.
As I mentioned, any company which is incorporated outside India.
Got it. Perfect. Where do I read more about Gift City? Is there any links? I guess get in touch with these Razorpay folks, right? There's plenty of literature from them on this. Okay. As per my understanding, Gift City account opening process requires PAN for the US company. Is that correct?
The answer is no, you don't need a PAN mandatorily. You need a PAN equivalent document which is issued in the respective countries. For example, if it's in US, yeah, right, it could be a tax identification number.
Got it. Perfect. So the IRS issues an EIN letter, that's sufficient. Okay.
Also, sorry,
Yeah,
Anandi,
sorry.
while we are on this point, I can confirm that having a bank account in India will not trigger P guidelines. One of my partners just confirmed that. So
Brilliant.
that's linked to
Okay.
PAN. Yeah.
That's very interesting. Thank you. Uncle from Longshot says, not sure if it was already answered, joined, but like my Indian company is partner of my US company. I'm not sure what a partner is. Indian company is cost center and there's transfer price. Okay, right. There's a transfer pricing agreement. Indian company is cost center. Can I bring 12 months cash advance for projected expenses and raise the invoice later? Is it recommended? What are the tax implications? How can I avoid tax for any unforeseen issues? I think we've touched on this largely, Pawan. This seems to be fine, right?
Yeah, that is correct. Yes, we have touched on it. Yes.
Yeah, you can raise the invoice, and we talked a bit about this. Okay, as per GST, I think 1 month time period for export of services to raise advance, but FEMA is 1 year. What rule applies? Pawan, I think this GST doesn't apply for export of services, right?
So let me understand. I think 1 month time period for export of services to raise. Now, FEMA is 1 year for sure. GST is. I think the question is within what period of time from when you provide services should you raise an invoice, right? So that is 30 days. So but in service industry it's very hard to pinpoint and say this is when the service is complete, right? So it's a continuous activity, but FEMA is 1 year. Yes.
Good. Okay. And Jay Parekh says, what would be the purpose code if we bring money saying it's advance or export of services? I think we looked at that. Makupi 080.
Benefit of everyone, I can share the list of all the purpose codes which is applicable, right? Maybe Anand, you can share it with them. But generally, mostly people use P0802.
Right. Yeah. Perfect. Okay. Ankur says, does LUT need to be renewed every year? Pawan?
Yes,
every year. Okay, 1 lakh per um
per year, per financial year. Yes.
not per invoice.
No, per financial year.
Okay.
So it's a declaration that you make in the month of April.
Okay, got it. And stamp duty in FDI 2 to 4% of amount invested. Any exceptions across all states, including UP and Delhi?
So the exception is that if the valuation of the company is on a higher side, then the stamp duty payment may be relatively less. That's a one exception. And as far as the stamp duty is concerned, it is uniform across India. So a company, wherever it is, it hardly matters. There may not be much saving on a stamp duty print. Only way to save is if the valuation is more, that's the only exception you will have.
Okay, so there's actually two costs in the FDI. There's the stamp duty and the ROC charges, right? How much does it roughly add up to?
ROC charges, that's what, it depends upon the number of shares which you want to issue. That
Right.
again depends upon the value of the company. On that, there is a slab, but it roughly turns out to be 2 to 4% across India.
Got it.
And one more stamp duty is for each state stamp duty for the amount of investment. That's also almost similar across all part of India.
Got it. Okay. Anonymous attendee says, does Razorpay help to get the ECB zero cost approvals? Or does this only apply to X customers or anyone who uses it to wire money? Maku?
It is
It's only
mainly
your-
for the portfolio companies, and this is purely on an exception basis, right?
Got it. Yeah.
Yeah.
Okay. Thank you. Sohail says, does it mean if we raise an invoice and get money wired in India, it has to be used within 1 year from the date of the invoice? We cannot use that money beyond 1 year. Just please clarify for us again, Pawan.
Yeah, so if you raise the invoice and you've got the money wired into India, we just offset the two, right? Because you would have utilized that money, correct?
Yeah.
In case there's anything excess that's left, you can use that within 1 year.
Got it. Perfect. And you can return the excess
That is correct. Yes.
without penalty, without income tax, without anything, right?
Yeah, without anything. Should be within 1 year. If it's beyond 1 year, you'll have to get RBI approval.
Got it. And obviously, the only risk there is the forex rate, right?
That is correct. Yes.
Got it. Perfect. Okay. So I think we've cycled through
And
these.
there was
Sorry?
another interesting question. Can you transfer money from a US account to a friend's account?
Oh, I didn't see that one. Where's that
Yeah, there was one. I wish I was that friend.
one? Okay. I'm sorry, I missed that one. I've actually heard that on WhatsApp recently. I'm sorry, I can't. Where's that question?
I think it was on top, but
Oh,
I'm not
okay.
sure in the US if that's possible to move money into
I
anyone's
mean,
account. That's
Yeah, no, we definitely don't recommend that in US of
Yeah.
moving it out of the company's bank account into. Someone asked me if they could move it into their brother's bank account temporarily, and then move it from their brother's bank account into, a new corporate bank account. I just don't see how that's possible accounting wise. I've asked our CPA teams, and they agree that that would cause an absolute compliance nightmare. So,
absolutely.
not advisable. I think movement of the money out of the corporate bank accounts in any country should be for a specific reason with paperwork to back it up. So, okay, good. So that's kind of there. And then we had some in-person question. I think someone raised their hand. I'm sorry that I kind of just skipped that actually. Whoever raised their hand, please feel free to raise their hand again. Do we have anyone here? Okay, well, anyone feel free to raise your hand and or ask more questions. Otherwise I'm going to keep going. So let me just cycle through all of these. The ones that I'm marking done. Done. This is done. Okay, now let's come to how can we connect with Razorpay for opening a Gift City account? Manku, kindly punch in your email address here, or Sally, if it's okay, on the chat.
I have just posted this on the chat.
Or
Perfect.
you can also reach out to Maku and me. We'll just post our coordinates. I'm happy to take you through this.
Yeah, Anand, just to add on the last question, which came down, that how do you protect the forex, risk, right? I mean, in terms of rates. We also help you to do the forwards and hedging, right? Just FYI for everyone's benefit. Now, for example, if you are your Indian-based company who's giving services to a US-based company, and you have a regular foreign inward remittance which keeps on coming month on month, right? And you are unsure about the forex rates, you are always exposed to the currency risk, right? We can help the portfolio companies, do the hedging, which is forwards at a very, very lucrative rates.
Okay, great. Maku, I think you posted the message to me directly. Could you kindly repost that email address to everyone just in the drop down?
I
Okay.
I have put it on the common chat. I
Okay,
guess
perfect.
that goes to everyone. Yeah.
Yeah,
Maybe somebody can confirm if they can all. Yeah, I guess you can.
no, I think you also posted it to hosts and panelists. Let me.
Okay. Oh, okay. My bad. I
You got to
will
select
just.
okay, let me do it.
Yeah, I'll do it. Yeah, one minute. Sorry,
done.
how do I choose it?
It's
I
okay.
don't have the option to do that.
It's okay.
Yeah,
I think
sorry.
I have
don't
to.
think.
I've done that now. So yeah.
Yeah.
Okay.
I
Is
think there's a
Razorpay?
question.
Sure. Is
Yeah,
Razorpay
is it?
banking account and opening paperless if all founders are outside India or need to get wet ink signatures?
No, unfortunately, if you want to open the business banking account, we need a wet signature for the account opening. So for that, we do need some founder, at least one of the founders, to be in India.
Okay, let's talk a little bit, just briefly about that. If I come to Razorpay and ask for X, or if I go and myself open an RBL account or an ICIC account, which I think are your two partners, and then I come to Razorpay, what's the difference?
Yeah, so good question. So right now, the way the flow, the Razorpay X flow is, constructed, you need to come to Razorpay first and open the account. Eventually, the account does get opened in RBL or ICICI, which are our two partner banks, and you can choose which bank you want to do this with. But the flow is right now the way where you need to come to us, and we need to, share your details with the bank. We don't have the reverse flow where you can already open the account and then integrate. That's something we are working on, but that's not live right now. So
Okay.
again, in full transparency, we do it as some exceptions, but it's very complicated and it just creates a little bit of a mess.
Got it. So, would I end up paying some software fee?
No.
Okay, was that there before? Because I'm under the impression that you used to have a software fee if I didn't come directly to you.
Yeah, so exactly. So that's sometimes gets a little bit of a mess because we basically have an arrangement with both the banks where there's an API integration that has to happen between the Razorpay X and the bank, and we have an arrangement with both the banks in how the leads flow. So when they go through us, it goes through like the channel that we've agreed on. So sometimes if you've already opened the account, then we kind of have to make some exceptions, and therefore sometimes the bank may say that there's an implementation fee, etc. But if you come to Razorpay first, there is no implementation fee. There's no integration fee. There's nothing.
Got it. Okay, wonderful. Okay. Can we choose ICICI instead of RBL?
Yeah, as in we would like you can choose the bank.
Cool. Okay. This is all the questions so far. Again, I ask the crowd and floor if there's any questions, please raise your hands. Otherwise, I think we've covered most of the questions. We've done quite well. So I would at this stage welcome, whilst we see if there is anything else, welcome some final thoughts. Let's start with Maku. Maku, just wrapping up. Just roughly, what are you seeing with founders in the last 12 hours or 24 hours, and how can founders, kind of curb their anxieties at this stage and remain calm and do the best thing for their startups, their customers, their employees, and their investors?
Yeah, Anand, I think there is a panic situation, right? There's a sense of urgency, right? People want to move out the money from their existing bank currently, wherever they are holding the account precisely, more to do with SVB, right? See, what we have done in the last 12 hours, I personally would have spoken to almost, if I'm not wrong, more than 70, 80 odd founders, right? Where we are helping them to set up the accounts in as low as 6 hours, right? We have set up close to about 15 odd accounts in 6 hours of time. And that is in Gift City I'm talking about, where they've already initiated the fund transfers. Some of the funds have already been reflected, right? And, the entire team is working between today, tomorrow, day after as well, right? And just in order to ensure that, there's less of, concern, there's less of worry, and whatever best possible from our end, we are trying to facilitate everything, whatever we can from our end. And that's working pretty fine. Unless and until there is some sort of restrictions there in US, right, where you're not allowed to do fund transfer, or there are accounts which has been blocked, etc. But wherever, yes, the portfolio companies are able to do the transfer, we are helping them set up the Gift City account, or via FT, or some of the companies have interestingly taken the FDI route as well, right? So all the options are pretty much available. We are trying to prioritize it as much as possible, right? Me and my entire team is working on that. Yeah. So yes, there is a panic situation. There is a sense of urgency, but yeah, we are trying to, calm down the situation as much as possible.
Wonderful. Thank you, Michael. And Shaili, just on a broad base, the whole X environment, X payroll, X banking, X corporate cards, any broad themes you're seeing in the last recent time?
Yeah, I think I think Maku's captured quite well what at least the last 12 hours have been like. But I think just of course, seeing a lot of people thinking about how to move funds, trying to understand what the different options available are. I think there are, again, right, the part and thoughts, there are multiple options. There are, of course, there are going to be constraints in terms of what you can choose, given your structure, given maybe where you're incorporated, what entities you have, and therefore there will be certain implications of even tax, right, compliances along with that. So there'll be certain restrictions basis that. But I do think there are multiple options of worth definitely to talk to experts to figure out what you can do. But we've also realized that for every merchant or every company, there's a little bit of a unique situation. And so you will, it's not really a one size fits all kind of solution here. We'll have to figure out for your unique situation, what works best, and also take into account compliances. So, yeah.
Briefly, the vision for RazorPayX over the coming months and year or two. How else are you planning to build out the stack?
Yeah, thanks, Anand. Great question. I think in terms of the vision, I think we remain very committed to saying we'll basically work in areas to make any kind, like all kinds of money movements simpler for founders, right? So one of the stacks we are building is actually in cross-border movements. So we have the FDI and the Forex proposition. We're expanding that, to make it more seamless and make it easier, faster, right? And a few of the other stacks that we are building are on accounting integrations and on vendor payments. So basically, easing how companies want to build integrations with their accounting system so that things are flowing easier between the bank ledgers and the accounting ledgers. And two is in how you pay your vendors and everything around how invoices are generated, how they flow in with your bank, and everything that you can ease around it, right? So I think those are a couple of the the newest stacks that we are building, and that's probably what's going to be focused for the next year or so.
Great, thank you so much. There's a quick question in Maku about prevailing FD rates in Gift City account. We've lost your voice.
Yeah, am I audible?
Yeah.
Yeah, so the FD rate ranges between 3% to 5.5%. I will share the rates. There's a chart for different tenures. I can share the rates with you, Anand, if that works out, and maybe you can share it internally.
Thank you so much. Yeah.
Yeah.
Okay. Pavan and Vignesh, final comments, and then we'll wrap up. Just 2 or 3 lines on how you're seeing the situation play out amongst your clients, and what is your general advice to early stage founders, since you deal with hundreds of them?
Yeah, Anandji, so it's been tough last few hours, but the solutions, at least because we do this day in, day out, it's not been very hard for us to find solutions, and we also understand the businesses of our clients pretty well, so at least able to turn around solutions quickly. We worked with all these options for the last many years, so we know what the implications are. Yeah, but I'm sure things should settle down in the next few weeks. Either way, at least it's more of panic as of now, which may lead to hasty decisions. But there are certain structures that, for example, advance against exports, transfer pricing. These are tried, tested models, and it can be put to work very quickly. So I don't see a reason why founders should be jittery. Founders should be worried. There are ways and means by which your funds can be secured. And also, once things settle down back in the US, you can send money back. You can repatriate those funds. So nothing to worry about. And I think, with the right set of people, you should be able to find good solutions.
Yeah. So you feel that this is a short-term dislocation, and there are solutions which can be solved. Perfect. Okay. Okay, I'm gonna just post. I've taken the liberty of posting everyone's contact details and LinkedIn links here. Please feel free to reach out to the folks here. And BCL India is based in Bangalore, South Bangalore. Raise is obviously based in Bangalore. I'm also based in Bangalore, and yeah, any of us are accessible at any time. Thank you so much. We're going to wrap up here. Thank you to.
I think Anand, we have one more question.
Oh, okay. Sorry, I missed that. We have Rajesh says we have a sister company in India. We transfer money monthly to an Indian bank account for covering costs through an invoice, but every month the Indian bank asks for a wet signature document to release our money. What's a better solution? Interesting. Pawan?
I think the wet signatures for the invoices maybe, but digital signatures are acceptable. So I'm not sure, which wet signature this is. Maybe, Rajesh and I connect separately.
Sure.
Our email ID is there. So
sure. Maku, can you respond to this one?
I can. Yeah, I wanted to. I saw Mr. Pawan replying, so I didn't. See, transfer pricings are, fund transfer are pretty simple, right? The moment funds are cited in India, all is what you have to do is give a disposal instruction. I don't see there is a paperwork involved here at all, right? There's a one-time disposal which you can always sign with the bank for once, and that holds good throughout the journey.
Okay. Great.
At least that's how it works with our banking partners. I'm not sure about the other bank, so may not be able to comment on that.
Sounds good. Keshwan is asking about Gift City. I think the contact details are there, Keshwan. Please get in touch with these folks. Yeah, perfect. Thanks all. I think that's it. We're done. Thank you to BCL India, Pawan and Vignesh. Really appreciate your compliance inputs. Thank you so much to Saili and Maku from Razorpay. Really appreciate your inputs as well. Thank you to the crowd for a very lively discussion. This recording will be available at inkle.io/talks within 24 to 48 hours or so, once we've managed to get that there. All right, great. Thank you all.